we're gonna go ahead and get started, and the stragglers come in, with a lot of men. So one, welcome everybody. Independent Trading University's prep call. We're simply just going to be going over the things coming up this year. We just finished out a really great year. Really easy trades, especially closing out the end of this year is a great time during the holidays because we know, right, everybody's out there spending bread. So markets are going up, companies are going up. Few trade indices, they were flying through the roof, breaking new highs and things of that nature. Huge announcements we saw on that. How we're going to take the flow for today. We're going to have our good fundamentals coach here, Mike, go through what we're looking at fundamentally going into 2024, what we're looking at as far as the dollar is concerned. I'll be following up with indices. We'll also be tapping in with gold, EA and GA, some yen pairs, and we'll end off with a little crypto. And then we'll have our mindset coach from ITU come through and kind of give you guys some coaching on just having your mind right as we go into this new year, right? That's the biggest portion. Once you get the technicals and things down pat and understand that the rest is really just execution, psychology, and just making sure, you're not letting the market overpower you and you staying focused on how you're executing your trading plans. So just be aware and be ready for that. So other than that, without further ado, Mike, lead the way, sir.
I appreciate you. Thanks, Zane. Just to let you guys know, I do have a little bit of internet difficulty. I cut it in and out. I apologize. My name is Michael Franz. I trading for going on 6 years now. I've learned a lot within this game, and I'm in this position to be able to pass along a lot of the fundamentals that we see every day through the news. Right, we're told one thing on the screen. TV tells us, a narrative that is, but when you read the charts, you can actually see what's really going on. You can see what I always say, you can see the forest through the trees, right? So when you can see that and you can follow money, you can make better decisions, not only in your trading career, but also just in general, right? So perfect example, we knew that the housing market was going to start coming down quite a bit. Due to understanding where the US dollar was going and understanding the fundamentals, I was able to sell my house at the height of the most highest peak before it started dropping, right? So there's things like that. Or if you learn how to mark up charts coming through, learning what we see, learning patterns, etc., you can actually take what we do within Forex and you can turn around and stock charts for the same thing. You can apply those to any options tradings or anything like that. So it gives you, just being able to read the charts gives you insight to really what's going on, being able to protect yourself and your assets, so to say, and kind of just giving you that cheat code, so to say. You know what I mean? So um, I specialize not only in the fundamentals but also the US dollar. If you guys join ITU, you'll see that my Discord name is Michael France, DXY King. That's because personally, I'll be the LeBron James, where I'm self-proclaimed this, but I've been told, I'm good at the DXY. The DXY is the U.S. dollar format. It's literally the index to show how the U.S. dollar is moving, and if you know how the U.S. dollar is moving, you can know how the rest of the world is moving financially, which gives you a huge insight that a lot of people are not aware of. People think, well, I can go in and take a signal, make some money, I'm good to go. But yet you're trying to, go off of what somebody else is telling you. So a lot of people that I've come into contact with, they don't realize that that's why it's even a chart you can mark up. So, like I said, giving insight to the US dollar, the world's strongest currency, the base currency of the world currently, is huge. It's a huge insight. If you know when it's going up and you understand that it's based off supply and demand, not value, even though we're giving a number value, if you understand that it's based on supply and demand, then at that point, that's probably the easiest and biggest insight that I can give. Um, Perfect example. I'll pull up a chart here real quick and kind of show you guys what I'm talking about here. All right, so we'll remove this. So what I want to explain as far as supply and demand is when we're looking at numerical that inside of every chart. The numerical pair is literally the right down. It's not necessarily that it's devalued. It literally just means that there's more supply, right? So if you want to look at that as a devalue, you can, but that doesn't translate to the other currencies the same. So stuff coming out and it's been dropping. What's been happening with stocks? The USC, the NASDAQ market, they've all reached new highs, right? Because there's more money supply to go around. The theoretical thinking between it is that down and there's something as it has that cash and you can put it in gold, you can stocks, you can put it into what I read. When that happens, these will go down and simultaneously the other items will go up, right? So as long as you can see the highs and the lows when they need to reverse, that's the insight that's important. So quick little example. See, this is called the teacup. The teacup always comes back to reach it up, and then once it reaches, it makes a handle that would come off. This is bearish, which for it to continue. See, doing if you think about what's going on in this country right now, the dollar is out this country. Why numbers had reached so high? But what were we going through? Was valuable on the out US. It wasn't doing anything. Your $1 couldn't buy anything. Everything cost. If you had one thing, it probably doubled cost because of inflation. So how do they fight inflation? Right? Valuable within our confines of our country, our borders, right? You combat that with rate increases, which is why we've seen rate increases over the span of 2023 up until the end. The higher the more people will not borrow, the more people getting it. So in this case, there's less of a supply. It causes the to go up, but yet when inflation is high, we're hurting as well. That's why I say it's valuable to the outside of this country. You can go over to Europe, you can trade the US dollar, and you can get as one point when this reached the highest point, you can go into we actually broke the drop in the euro versus the US dollar, that exchange rate. First time in 20 years, we were more valuable than the euro when this reached this high. Why? Because as there's more supply, there's less trading. So all the other currencies go down, right? So there's correlation in everything. We learn what countries do what specific, like with silver, gold. There's current countries that have their hand in all of these items. When you can understand those correlations, you can also apply that to your trade and execute wherever and whenever on your charts, right? So what I'm seeing here, I gave you the example of what I'm looking at for 2024. I am looking for this to play. Now, this is our daily chart. You choose. Each one of these candles is one, right? So as we saw, we closed out the year on bullish momentum, right? The last 2 days of the year, trading wise, we're bullish. We reached a critical zone. This has not broken since back here, which would be the teacup for it to continue going up. So I feel like at this point right now, when you're trading, you don't want to sit here and put all your money into one play and call and say this is going to go all the way up to here. No, you go zone to zone. For the DXY, this is a very important zone. So it's going to react somewhere within here. So I have the US dollar going up for right now. I will say that when you're looking at when it's going to turn around and reverse, you look for your highs up. At least read lowest point because it broke. You're going to see this come up. This is our here. That's the thing, right? So as I'm watching this, I'm going to be reacting to it, but I've already got an expectation of where it's going to go. Am I prepared for everything else? Absolutely. Because just like I can say that this is going up, I can also say that at some point this could come down and go further down. Reacting in this zone, I can at least say it's going to retest this. That's the 100% from my position, the 100% guarantee that I can say. So I'm looking for either a buy or a sell once it reaches this critical point, this critical price. We don't go based on time frame within trading. We go based on price. That's our clock. Our clock is price. Okay. So you could be holding this for 3-4 days. You could hold this for 2 weeks, depending on how much activity is going on. Now, when you turn around and you look at fundamentally, all the banks are closed. And it gets fairly slow. These are not these are not topics daily. So this tells you everything, the radar and the docket for any form of news announcements from any country. When you see the effective towards the currency. So when you're looking at PMI, product manufacturing, that's huge because that allows for imports and exports to be affected. So those jobs open, when you're looking at job openings, that right. So it's bad. Like when we took to effect and we lost so many jobs, we've also seen people having to work 3 and 4 jobs, and this also fills job numbers. You got to understand that there is bias within these numbers. These are just basic black and white reported numbers. They don't go in detail. So when you're looking at jobs, you can literally say, okay, well, you know what? Somebody might have 4 jobs that they're working, but the job market is a lot better because it's going up because that person filled. Right. So it's not going to split out who's doing that, who's not doing that, and how true these numbers are. They just say, well, this many jobs are filled, this ones aren't, these ones aren't. And there's certain ones that come up where your highlights are really going to be within the news. Your NF payrolls, that reports, which we have one coming up this Friday. We have it coming, and it's always reported on the first Friday of the month, unless the Friday falls from the prior month. That shows how many jobs were filled. The higher the number, the better. It'll give you last month's numbers, or last month's numbers with a projection number. And look, they're expecting numbers to come down by 31,000 jobs. Okay. Well, as long as it goes above 168,000, that's going to look bullish. It's going to look positive for the country because our expectation is a lot lower, right? So there's also manipulation within the news. That's the interesting thing. When you learn how to read the news portion, everything becomes even more clear to even play the game. You got to follow. Saying when you find out what's happening with the currency when it's being moved, the whole trading world opens up. I promise you. There's the only thing 100% of everybody everybody I've come in contact to has always lacked discipline. Discipline is huge in this game. Your losses are lessons, but don't chase your losses. You have to come up with a plan for that. Do a training plan that eliminates a lot of the emotion, and it inserts the actual numbers, right? Like your what do I want to say? I'm having a blank here. Probability. Sorry, it removes the and it inserts probability to your trade. Some people get into trades too early. They get out too late. They miss their move. They lost their money, etc. They don't know when to get in. When you can eliminate all that emotion, 90% of that be caused by emotion. Oh my gosh, I see that I'm losing money. Well, what happens as soon as you close it and it goes your way? Just because you entered a little early doesn't necessarily mean that you're going to lose that trade. You just have to understand where you did and what happened. But when you can remove that emotion portion, you are your own worst enemy, and you answer probability, then you can be more sound with what you're doing. We have a trading plan that has been created that we share through ITU that will do that. So when we go over that, I always tell everybody as well, I expect that the first round of trying to attempt to go through the trading plan, you will fail. You have to stick with it. It takes 90 days to create 90 days to break it. So I always get everybody to at least fail once. Then get the conversation of, I blew my account. I lost this, I lost that. Well, 99% of the time, it'll come down to you either over leveraged, you didn't follow your plan, or it just it didn't go your way, right? So it will always fall on you. The market moves the same for me, you, and everybody on this call. So it doesn't change. We all see the same exact structure. The only difference between any of us that's on this call is our own execution, our mindset, which is why it's important to have a strong mindset within this game. This isn't a game for the weak. You're going to lose money. You're going to win money. But you also have to consider that they're not printing money for anybody who wins money. You're taking money from somebody else. So you're banking on somebody else being less educated than you. So why I say that is because there's been a misconception a lot where people feel like, oh, well, I'm just going to print money. I'm going to print money. I'm going to print money. I'm going to pay me. No. You have to be the most educated in the room. Otherwise, it's going to be your money that's taken. Now, where do I see the US dollar and the US here within the next year? We stopped doing interest rate increases in Q4. We saw everything skyrocket. Through the year of 2024, we are in an election year. So obviously, what's the best thing that, in this case, Joe Biden can do? He can make sure that we have as much money in our pocket as possible. If he does that through 2024, I guarantee you, majority of people will forget what's happened over the last 3 years. They're going to focus on the now, and they don't remember what happened over the past 3 years. I don't know about y'all, but it's been a struggle over the past 3 years financially. Food going up. I own a food truck, so being able to pay for my supplies has been ridiculous. Having to pass it on to the customer has been ridiculous. All because we have a reason that the US dollar is continuously going up in inflation. Now, when interest rates go up and they fight this, they stop the borrowing. Now you're affecting the housing market as well, or you're affecting the loan market as well, which are affecting banks. So fundamentally, expect with us, you're probably going to see news happening over the, I would say at least January, February, maybe even March, Q1. You're going to start seeing banks closing down. Don't believe everything you see and you read, but come up with your own truth. If you can take the chart and the article about what's going on, you can find the truth in them, especially at the beginning of the year when rates were going up, right? The higher they raise the rates, the more that inflation is supposed to come down. They didn't go as high as they were supposed to, but it still fairly worked because through Q4, we did see a little bit of a drop. So much, in fact, that they actually said in the last rate statement that they're possibly looking for rate cuts. Well, through 2024, that could put more money in our pocket. If that's the case. So that could be something that they choose to do. But for every action, they didn't do it right the first time, where they're supposed to raise rates as high as possible to break this thing. We have to understand that there's a reset that's coming. Whether you believe it or not, there's a reset that's coming. Some people will dive in further and say, well, it's a transfer of wealth, right? This, that, and the other. The US dollar is going to die, this, that, and the other. Well, there is a cycle, right? And right now there is a change. We're going to see a lot of US dollar change, and that's going to start at the beginning of the year. First things first is that the world is going to stop trading US dollar as their primary currency, slowly but surely. BRICS goes into effect January 1st. BRICS is the group of countries. It's Brazil, Russia, India, China, and South America or South Africa, right? Those are the 5 that started it out. They're adding 41 countries to this, to where they don't settle their imports and exports in the US dollar. That's huge because it takes away a demand for the US dollar. So I don't know if you guys have seen this as well, but there was also speculation that they're just going to burn cash. If they burn cash, there's less in circulation. It causes a demand, which will give us more value, right? Not sure how that's going to work out, but I say, look, if they're going to do that, just hand it out to everybody. So then this way we can actually become whole of what we used to be before the past few years. Give us that money back. But when that happens, we're paying for it in the long run. All of us. I worked during COVID. I didn't get unemployment. People were getting $1,200 a week check just for unemployment. People were getting stimulus left and right. People were getting SBA loans, right? This, that, and the other. Everybody went to go get the money, but what they didn't understand is that it's everybody who pays it back. I would ask everybody on here, how many SBA loans did y'all take? I would probably say none, if I'm correct. Majority of everybody on here, if everybody, y'all took none. But guess what? We're paying, as we work, the inflation that goes on, the reason why money is coming out of our pocket, it goes back to the Fed. Our government, when they're giving all that money out, they are going to get it back at an interest rate exchange, right? So it's that plus an interest rate. Thanks to federal exchange, because our government is literally borrowing money to give it out. Nothing is for free. So they don't care how it gets back, who pays it back. They don't care about that, just as long as it comes back. So that affects all 330 million people within this country. Fair or unfair? To me, very, very unfair. If I didn't go get these loans, I didn't. The guys that were buying Lamborghinis with all their loans, right? Guys that were getting caught for all these horrible things that they were doing, right? They weren't using the money for their businesses or anything. They were just using it, getting all these loans, scamming, and going and buying cars. I didn't do that. I paid my mortgage on time. Why do I have to suffer for that? Right? But we're all in it together. This is the unfortunate side of the divide. All of these topics financially, all of these topics religiously, all of these topics that are based on financial structure, right? Different classes, right? Political differences, right? All of these things are made to separate us. Consider that as well. Look at yourself in the mirror and ask, how emotional do you get over a lot of these things that you hear on the news? That's exactly what it's supposed to do. So then this way they can divide and they can conquer. Everything is made to do that. So there's a lot of power when it comes to this. Like, I could tell you some, Alicia, she's been on some calls with me. I've given her headaches with some of the things that I've talked about, but they all tie back to the financial market, right? Things that you would never, ever believe, that you would never think, well, why would this have to do anything? Well, you know what? As long as there's money involved in it, guess what? It's going to tie back to these charts. So over the past 6 years, I've had to look at myself in the mirror. I've changed a lot of my views. I've changed a lot of my opinions on things, and had to just recognize that, you know what? Maybe I was just as so uneducated that I didn't know what I was doing. And that usually tends to happen. I won't go into anything that will even cause any more separation than anything. I don't want to go into those. I'm not here to do that. What I'm here to do is literally make sure that you guys know that there's a lot of money in this thing going on. There's a lot of dirtiness, what I refer to griminess. There's a lot of, man, I don't even have a word for it, because it's bad. It's bad. We're being taken advantage of as individual people. Believe a lot. And when conspiracy theories are coming out, believe them. Start to believe them. Do your research to start to believe them somewhat, not the whole thing. Do your research so you can understand. So the things that I would say that are not on the forefront, go research NESARA GESARA. It's a financial change. Go research BRICS. It's a financial change. Go research some of the things just so you can be educated on how rates work, how employment works, right? Some of these huge topics that cause market pushes. We can go into these longer on other calls. That's what we're here for. This whole webinar is to give you guys just a taste of what's going on. So this way, maybe it might spark something, right? Come join us, take a look at it, ask questions, etc. That's what we're here for. My main position is to literally change the world on something that people are not familiar with, which is literally how we are being played. I hate to say it, but we all are. We all are. So at least, if I can at least at this point spark an interest to say, I need to probably open my eyes and do a little more research, then I've done my job. I want that to happen. I want people to be free thinking, free minded, and decision making on their own. I want that to happen. Unfortunately, it's difficult because I can't reach 330 million people. But if I can reach you, you can reach 2 people. They can reach 2 people, and they can reach 2 people. You apply what you've done and you help somebody else see the light. And at some point, there will be a massive change. But for what my concern is the people on this call right here. So I would say give us a chance, hop in, ask questions. I'm on Instagram. I'm on Facebook. We have a Discord. I'm always open for questions. If you guys ever have anything even outside of it, you guys don't want to, worst case scenario, you don't want to join ITU, you just have a question on, hey, you sparked my interest on that call on Facebook. Can I ask you a question? Holler at me. All I'm trying to do is help people see the light. So I would definitely say that, those 3 topics, the charts, the fundamentals, and the discipline and the trading plan, get those down, you're good to go.
100%, Mike, 100%. Hey, great message, man. And completely agree with you. As we go into this year, there is going to be a giant financial separation. We know that's what's coming. You just want to be on the right side of this thing as we go along, and utilizing trading as a vehicle to get it done. There's nothing wrong with that. So appreciate you, Mike. Appreciate your time. We're going to follow up. I know Daniel is on a time crunch here. So Daniel, you can go ahead and step in. Give us a mindset that we should definitely have as we go into this new year, not just as traders, but, just even as individuals, and being able to handle the things coming up and making the right decisions as we go along through our trading.
Absolutely. Can you guys hear me okay?
Yes, sir.
Okay, perfect. Yeah, guys, so my name is Daniel. I'm super excited to be on here. First of all, Mike, I love Mike. I think he just popped out, but he just always brings just such a realness, and he's so grounded. And I've been blessed to know Mike for many years now, and the same with Zay. And it's just, you're never going to get any BS with either of them. So I'm just really excited to be working with them. But for you guys that are on this call, I don't have my camera on right now just because I'm driving, but I'm really excited just to give you guys a couple nuggets moving into this year that you can apply to trading, to your daily life. And for those of you that are new to trading, or whether you did trading for a while and you took a break and now you're coming back, or you're a seasoned trader, it really doesn't matter. I'm going to be straight up right now and say, if you don't think that your daily life will affect the way that you trade, you are wrong. Number one, because trading can be very emotional. And so if you go into the charts with the emotions of situations that aren't relevant, it is definitely going to affect whether or not you take a trade. Because think about it, if you, let's say you have a family and you just had an argument about money or whatever it is, when you sit down to the chart, if you have an argument about money, that is what you're going into the charts with. So all of a sudden it goes from placing a trade and observing a chart to absolute necessity to diffuse the argument that you just had. And that is not a healthy mindset to go into it. So I'm going to honestly keep things really simple. If you guys want to get more in depth on mindset, on how to become a better trader, how to have a better mindset with trading or just in life in general, I highly encourage you guys to get involved into ITU. You guys will have more in-depth calls with me. There's going to be interaction between Zay and I. It's always and Mike. It's always. I feel like a lot of information comes out between dialogue as well. Like when you're dialoguing with something, things are just brought up that are, might not happen if it's just a session or a seminar. And so, definitely tune into that. I've known these guys for a long time, and they're amazing dudes. So what are the things I'm going to give you guys to go into the new year with that you guys, I would really encourage you to apply to yourself first and then go into trading? The first thing I'm going to say is that you're going to need to figure out where your identity is. Okay, so what do I mean when I say that? Your identity is how you think you appear in this world and who you think you are. All right, so when you're sitting down to the charts, when you're with your family, when you're at your job, whatever it is, what is it that you think defines you? All right, so one of the biggest examples of this is we often take things that are good and we make them ultimate. And when we make them ultimate, that becomes our identity. Money is a perfect example of that. Money itself is good, but when we make money the ultimate driving force of who we are and money becomes our identity, all of our decisions start to wrap around money and the either having it or not having it. And what that does is it skews the reality of every other situation going on in your life, because you're going to have more experiences without money than you are with money in terms of your actual reality. Now, obviously, I'm not talking about the actual transaction of experiencing things because you've paid for the experience. I'm talking about, what do you experience more, a financial transaction or an emotional transaction? It's the emotional transaction, of course. And so if you don't have your emotional transactions down, and if you don't understand your emotions, it's going to be a lot harder to not have your identity rooted in these financial transactions, which are just going to change the way that you trade, change the way that you live, et cetera, et cetera. So one of the first things I'm going to give you is an acronym, okay? And I don't want to sound like a second grade teacher here, but if you don't know what an acronym is, it's basically a word that has a bunch of words associated with it to make you remember a pattern, okay? So the word is frame, F-R-A, M as in man, E. The F stands for function. Okay, so the F stands for function. The R stands for reality. R stands for reality. The A stands for assimilation. A stands for assimilation. A-S-S-I-M-I-L-A-T-I-O-N. And the M stands for meaning. And the E stands for environment. Okay, so frame is your word that you think about. When you think about frame, I want you to think about these 5 words: function, reality, assimilation, meaning, and environment. Okay, so why are these things important? Number 1 is function. Your function is the place that you function from in your day-to-day life. This place creates your reality. Now, the place that you function determines whether or not your reality is true. Okay, there are people around the world living in a false reality. They just are. Whether that's because of past trauma that's not allowing them to see straight, whether that's from living in denial, whether that's from pride, whether it's from fear, they're living in a false reality. So the place that you function from needs to be authentic to your identity in order for you to create an accurate reality. By doing that, by having your function in place, creating an authentic reality, you're going to lead yourself into an easier place for authentic assimilation. And assimilation are just the things that your mind, you're making things for your mind to absorb. So think of your mind as a sponge, which I'm sure you've heard this analogy before. Your mind is a sponge, and you squeeze it every time you experience something. And when you let go of the sponge, when it's in water, what happens? The water gets inside the sponge. You need to know what your water is. If your mind is a sponge and you're watching garbage on TV, you're watching garbage news, you're watching garbage on social media, you're not being a good steward with your money, you're not aware of your emotions, you're not living in an authentic reality, you are going to be a sponge. And when you are squeezed, you're going to squeeze poison and you're going to suck in poison. And that's how you're going to exist in this world. So by functioning from the authentic place that you need to function from and creating that real reality, you're going to create a better place for you to assimilate, and for assimilation, for your mind to absorb things that are going to actually help you and the people around you. What this is going to do is it's going to create meaning, because the things that are going to be in your mind are from an accurate place, and it's going to give you meaning in your life because you are going to be living in an authentic place. And when I say authentic, that's a tough one, because someone's like, "Oh, I think I'm a stick of butter." That's how I appear in this world. And I'm not going to say, "Oh, you be authentic to your stick of butter self." I'm talking about real authenticity of how you actually appear in this world from a place of true reality and from a proper place of functioning. And that is going to give you meaning, because as you go throughout your day, you're going to know who it is that you are. Because the best thing that you can do in this world for other people and for yourself is give them the real version of you. It's better, there's a quote, and it's better to be hated for who you are than loved for who you are not. And let me tell you, that couldn't be more true. How many of you would want to be accepted, but deep down you know it's just because you're lying to yourself and other people? And what it's going to do is it's going to create a real group of friends for you. When you're your true self and you have friends, those are your friends because of who you actually are, not who you're faking to be. And what this is going to do, what having the function, reality, assimilation, and meaning, it's going to create a healthy environment for you and the people around you. Because imagine being the person, everybody's like, "Hey, I noticed you always stick to your morals, or you're so calm in chaos, or you have so much peace about you, or you're so authentic, or I notice you don't cuss," or whatever it is. Okay. And people say, "What is it?" And then you can just tell them this. Like when Mike said, when I tell you and you tell two people, it's not even about telling two people. Like, out of all the people on this call, okay, so there's 11 people on this call, including myself. I personally, I don't know all these people anymore. I have over 3,000 contacts in my phone. I consistently talk to probably 100 to 150 people. You guys probably have at least 10, upwards of 50, 100 people that you know. So it's not just talking to them about this stuff, it's existing from this place. So you guys have way more influence than you think. And those people that you talk to, they have 50, 100. So when you're talking to one person, you're really talking to over like 1,000 people, because it's how they live in the world and who they communicate with, and then who they communicate with, et cetera, et cetera. And so having this frame of mind, use this to structure your goals, use this to structure your patterns, use this to overcome the things that you're trying to overcome and all the obstacles that are coming. And then from that place, step into the trading world. And then what you're gonna do is you're gonna create solid ground for yourself. You're not gonna be the house that's built on the sand, and when a storm comes, you're just gonna sink into the ocean. You're gonna build your house on solid rocks. When the storm comes, you withstand it. And there is a storm coming. There's already been a storm for years and years. And so I really encourage you guys to figure out, what is it that I function from? Who do I think I am? What is my reality? Am I lying to myself? What's the biggest lie that I believe about myself? What are the things that I'm absorbing right now? Take some intel and see, what kind of content are you consuming? Are you consuming content that's going to make you better? Or are you consuming content that's going to lead you to a place that you don't like? And if you don't think the movies that you watch, the podcasts you listen to, the music you listen to affects you, look at the youth growing up right now. Look at these 6, 7, and 8-year-olds who all of a sudden know these words that I didn't even learn till I was 15, who are doing these dances. They're being sexualized younger. They're cussing younger. They're getting access to things younger that they shouldn't get access to. And it's all because of the content that we consume. And so I encourage you guys this year, one of your biggest goals should be the content, should be changing the content that you consume to push you in the right direction, and encouraging others to do the same. Because we control the narrative. We control the narrative. So if there's an obstacle that you're hung up on, I believe this lie about myself. Is that because I created a false reality? Where did this lie come from? Who's involved? If you have questions about the things that I'm saying, I go in depth on all of these things and so much more, being the mindset coach for ITU. And so if you guys want to learn more about yourself, more about identity, more about how to frame your mind properly, more about overcoming obstacles that have been holding you down for a long time, creating new patterns, all these things, you guys will get all of this when you become part of ITU. If you're already a part of ITU, you know this. But 2024 is the year to do it. And we say it every year. It's 2020 is the year, 2021. The reason 2024 is the year is because it's not 2023 and it's not 2025. You have no idea what's going to happen this year. So start at the year that hasn't started yet. It starts tomorrow. And so set yourself up for success. Start building your foundation. Whatever house you have right now, demolish it. Start rebuilding, rebuild on solid ground. ITU is a huge building block. If you want to get into trading, if you want to get a better mindset about trading and about yourself, ITU is a great way to start building your foundation. And as you go along, when you get on these sessions and we do this more and more, I'm going to teach you how to construct a house that is indestructible, especially in a world that is so uncertain, where there's storms coming all the time, narratives change all the time. When in a world where every story is changing every day, keep yours the same. And so that's all I have for you. The reason I'm going so quick too is because I'm driving to California right now and the service is really spotty, so I don't want to cut out at a really integral part. But I apologize if I was talking quickly. I know I probably skimmed over some things that, I mean, the stuff I just talked about, I could do a 3-hour seminar on easily, and I just squeezed it into 15 minutes. So if you want to get in touch with me, get in contact with Zay. I'd be more than happy to, discuss anything else with you guys. And I wish you guys all the best in your upcoming year. And I'm looking forward to meeting you guys in ITU.
Most definitely. Hey, Daniel, thank you so much, man. I completely agree. Man, you've got to have your mind right. You've got to have your ducks in order as far as your personal life is concerned, because it will reflect on the charts. It will reflect on all the decisions that you decide to make, within your trades on a day-to-day basis. So it's a good time to think about, how's your schedule? And I tell people all the time, use that trading plan to fit your life. Don't try to, fit your life into trading, because it's going to get difficult. It was a lot easier for me to just say, hey, this is my schedule. This is how I'm going to flow. Here's my time of the day where I have time to myself, where I won't be bothered, interrupted. If I have a bad day, I'm not trading that day, and it's okay. The market's not going nowhere. And I can always come back and do my thing. So just focus on that skill set, and knowing that you're grounded in that arena. But Daniel,
Absolutely.
Thank you so much, man. Thank you for your time.
Of course. And if anybody has any questions, they can text them to Zay or ask Zay on this call, and he can shoot me a message, and then we can personally reach out to you, and I'll make sure that you get your questions answered. If there's anything that I said where you're like, what did you mean by this? Or what do I do in this situation? I'd be more than happy to answer those.
For sure. I'm going to go ahead and I'm going to follow up. Daniel, thanks again, brother. We're going to go ahead and get into these indices, see what's going on. I mean, it's really not too much to question on that front. So let's dive right in here. So starting off, let's just understand the overall picture, right? Economy is going up, been going up, right? It's not really too much to question in this arena, right? We understand, since the last really big bearish engulfing that we had here, immediately neglected that and had the rise up. We can see the structure points and literally ladder step. Even with 2020, we left fair value gaps in this arena that we came back and checked and then continued our push forward. And now we're ending off this year with another bullish engulfing. So that's already telling me out the gate, we are moving to the top side. Just as much we know fundamentally, if you haven't seen, let me see, I think they talked about it on Market Watch, all-time highs, right? SPX 500, we can see here on US 30, we're breaking all-time highs. So when we go back and we dive in, and I suggest all of you do a top-down analysis. If you're students here, you already know that's what we do. We start at the top and we work our way down just to see how things are forming and building over time. Even here, we have that same situation, but we had that prior bearish engulfing, neglected that. I think we're going to see major rises in the coming year. And that doesn't mean that it's going to be good for everybody as we see things with job losses and a lot of these companies moving over to AI usage and things of that nature. So the economy looks good, doesn't mean it looks great for everybody. But for us, we're going to take advantage at these little support areas. So we know 6 month, I already have marked up. Here's a nice resistance. We finally broke that. So as we're going down, we're going to work our way into the 3 month. Another beautiful engulfing, beautiful break. Nothing to complain about there. So something we can take into account is that we have a resistance level. We have it right here at 35,729. So that may be an option for the market at the top of the year, right? If it opens up into that downside, and we already saw that Mike showcased how the dollar is looking to make that move up before proceeding down, it makes sense then for US 30 to make that move down first before moving topside. It's just a matter of where it's going to land and start to create a new support level, right? So we're just gonna be patient. If you're a buy side, you're gonna be patient. You're gonna wait until it picks that location. We can look at the monthly perspective. We're coming off a beautiful, nice bullish engulfing pattern, followed up with another big bullish candle, right? These momentum candles are saying like the pressure is topside. So I don't have to question too much about where the market's going to go next without even really drawing any lines, right? It's obviously telling us what it wants to do. I'm going to get down into my weekly candles and I'm going to say, okay, I have 2 major support levels, right? I can, if you're a Fibonacci user per se, I can take a Fibonacci from our previous low to our new high and add another potential area for support. We know we have our 50%, and usually you'd look for the market to adjust and hit those levels off the Fibonacci. But with these higher time frames, I'm completely more looking for support within this first fair value gap. It's a weekly candle. We have a nice weekly momentum. I think that'll be the major arena that the market will look for any type of rejection, any type of support. So that'll be my first place to say, okay, if we come here, once we get to this location, I'm going to wait and see off the daily, the 4 hour to say what candles are being built here. The other thing I want to show you guys too is we look at our RSI. We're way outside of our RSI. So it is time, it's a decent time for the market to make and move back down to the downside, right down here. So I'm going to take that into consideration. I'm going to say, okay, as I dive a little further down into my lower time frames, I want to see, okay, what's the RSI doing? And I want to see what the candles are doing at those levels at the high to see if it is time potentially for a sell going out the gate this week, because we do have NFP coming up, PMI like he talked about, and that news is going to affect what happens in the market. So let's move on down here. Now, from the RSI's perspective, right, it's a beautiful head and shoulders pattern that we see here. This is also coming into a potential double top. We did not get a strong engulfing on the daily at the end of Friday, but it's understandable as we get into the end of the year. But as we go into the rest of the week, I'm going to start looking to see if this market is going to develop the same setup as my RSI. Right? We have a resistance level here that was created. And if we look left, always look left, right, look left to get right. That immediately lands on the first support that we potentially saw from the higher time frame where the market could reverse. Once I take my sell and I get to that position, smartest thing you're going to do is take 75% off of your profits. So I'm going to take off 75 at that point if the sell commences, and then we'll set our stop losses in profit and we'll take partials, let the rest run. You're not going to jump in. Here's the big mistake traders make. It'll get to these locations that you have mapped out, and it'll just say, okay, I'm going to immediately buy at this level. Well, not if the market hasn't shown you any type of slowdown. It doesn't make any sense. If I look back over here, sold nicely. We got a nice neckline retest, nice double top situation, and fell nicely. Same thing on the opposite side. Nice double bottom. If you use your RSI, look at that, way outside the RSI. Same thing we can take into consideration here is the divergence, right? Nice divergence there. All signals to say that the market is reversing. Right after that, you've got a retest of your neckline area. Right, looking left, this was obviously previously a support. It came right back into that and continued to take off from there. So there are gaps along the way. So at some point, there is a potential chance for the market to revisit this. So the one thing I want to tell you guys, if you go back and you look at 2020 and go look at where the market stopped at, where it stopped at was a crucial point, just like this, where a fair value gap area was left. And if you don't know what a fair value gap area is, it's basically the locations that are left for retail traders to basically find positions into the market, right? So big money is going to make the move, then the market typically will come down and fill that gap area. And that's a place where we could take advantage as retail traders. And we can see there's tons of them along the way here. So I'm going to be paying attention in the top of the year for those sell opportunities, as in we were looking at the dollar for buy opportunities early in the year. And then as we go along, I'm going to wait for these areas to get, revisited for me to then say, okay, is this a location the market wants to slow down? Do I have a bullish engulfing? Do I have a morning star, right? Do I have any candlestick pattern that supports this idea that this is going to be the spot where it decides to stop? Because this is how you get into that swing trading arena. This is how you get into that position and say, okay, I could be able to hold this for weeks or days at a time. And since we're planning, remember, you're planning off of the 12-month, right? If you're planning off the 12-month and you find a location on the 12-month, you can hold that for an extended period of time, right? These are the things you want to be either typing down. If you go into, your daily, you're going to leave yourself some notes to say, okay, at, let's say our level of 36, what's that, 274, right? Where we had that previous resistance and immediately took off, but we never revisited. I'm just gonna leave this X at 36,274. Look for potential buy opportunity. All right. And I'll just have that sitting there, wait for me to go. On the top side of it, I'll just have potential sells. Keeping track of head and shoulders possibility. Wait for candlestick patterns. And then if I go to, say, Forex Factor, and I want to add some fundamental concepts. Now, I only look at my red folders. Those are the most important to me because they really push the market in the direction that I either wanted to go and or retesting a location that is interested in me. So I have news coming up on Wednesday. USD is going to have some news. It's going to be PMI like he talked about. I'm going to leave that in consideration. Watch for news on Wednesday. Okay. Now I'm prepared. Not too many other questions for me to ask. I'm ready and waiting for the market to then develop come Tuesday. See how we open up. If it opens up to the top side and doesn't break the high. All right, so let's go down into this small engulfing pattern we have here. Let's go into our 4-hour. Bring our RSI in here a little bit because there's even more information there. So I'm looking at this and I'm saying, okay, we had a strong rejection at the previous location. So I look left. Here we are at 37, about 766, which isn't too far from a quarter point, which is just QP levels within our price, right? So we at 37,766. This is close to 37,750. So it makes sense to, if you did sell Friday, fantastic. If you didn't, there is the potential for the market to do it again. Why? Well, with news coming out, news is either going to push us in a retracement or push our direction. So here we have that opportunity again for a head and shoulders pattern right here within the 4-hour. Now, if I'm taking that into consideration, I'm also going to look at my divergence. And again, you can just be adding these notes into your chart as you go. Where's the divergence? Here and here. Just like we saw before with that earlier buy side around, I think that was maybe August, September's time frame. I'm expecting the same thing. This is supporting the sell side decision that I'm looking for. So this is just how you're going to go about breaking things down, setting up your charts to be prepared. Now your job is to just execute. It's not my task to go in here and rethink this come, the beginning of the week, unless these areas are broken. If it breaks, it closes above, okay, that might change my idea. But once we get to this location, again, I'm just gonna go down and maybe go to the hour and say, okay, well, look at that. We have a beautiful engulfing pattern that was developed, all right? Sell side, bearish engulfing, fantastic. So now there's more so of a case for me to say, this may just respect the 50% of this engulfing pattern before the procedure continues into the sell side. Other thing I would like to take into consideration, the current trend, right? I'll take this small current trend we've been following since December 20th. Nice recent break, not too hard for me to then make a decision here and go ahead and take my entry at either market open or sometime in the beginning of this week. I feel comfortable taking this sell and having my stop loss right behind the head. So now I'm going to go into here, grab my short position, set up here, being accepting of the risk. If you're trading US 30, right? No, it's heavy. No, it's not something to really play with. This is the market. I mean, it's already going to cost you 120, 160, depending on your broker, to take a 0.01 lot size sell on US 30. So just be aware of the risk you're taking. Use, your lot size calculator, whatever you use to calculate your pips and things of that nature. So very simple for me to be able to take this sell. Now, along the way, like I said, once you hit certain TP levels, say you're just going to take it back to a previous structure point, right? So here we have where the market respected this area. How do I why would I choose that point? Well, we had a nice buy side support here. We had a nice sell side resistance here. And we had another buy side here. Obviously pretty strong because once it touches it, it's gone, right? So same thing, that'll probably be target number one. Maybe you take some partials off at that point and you're just gonna work your way down up until you get to one of those buy side areas you had already set from the higher time frame. So try not to make this too difficult. I know sometimes for me, I'll do a stop loss behind right shoulder. I mean, just keeping it tight. It's completely depends upon your risk management, like how you like to, control your risk. I don't like to have too large of a stop loss primarily, but I do like to give my trade room to breathe. Then it also leaves me the opportunity to get in again if things do change. And let's say it does decide to break this high, right? If it breaks the high and then comes right back into it, right? And does something like that, then I still leave myself some room to still be able to get in the trade and get, take advantage of it. Or if you're up here and you've got your stop loss up here, you left yourself some room, don't over leverage, because then, you're not going to blow your account having a stop loss of 105 pips. Okay. So very simple way to just break down every chart, knowing what you're looking for and what you want to happen. If it doesn't happen the way you want it to happen, then there's no reason for you to take that trade opportunity. Same thing, of course, is going to go for NAS. Just remember US 30, NAS, SPX. Most indices all follow each other almost to the T. Things may adjust, but as you can see, just from the 12-month, understanding the overall view, these markets have been bullish from NAS to SPX to German 30 to France 40. So one reason why they're my favorites is it really doesn't take too much for me to have to think about what's going to happen next when I have a viewpoint like this that goes so much into history. Okay. We can get down into our monthly. We can see that, France 40 attempted to break the high, right? But decided to close back below, not a problem. I'm going to go down into the weekly. I'm going to see where those structure levels are again. Nice momentum candle from a few weeks ago. This will probably be the candle it decides to respect. If I go down to the daily, I can see it left that fair value gap for us to potentially take advantage of. And again, I'm going to look for that sell side because what did we close on? A nice bearish engulfing. We have failed to break the high on many occasions here. Not too much for me to think about. Oh, not the 8, I like to go to the 4. Because most people usually have access to the 4 hour. Okay, and then when I look at the most recent structure, the other thing I'd like to take into consideration here is the potential for this to be a flag, right? I'm going to watch out for that because that could alter the sell. So what are my two options here? One, previous resistance level here. We could break down to the downside, respect that area, and find a buy location. We could also respect it as a flag, break to the top side to that resistance level that we marked up, get a retest of the flag, which is the normal way that you would trade it. And please don't make things hard. Go to Google and just type in bearish flag pattern. And I mean, you don't have to put Forex market or anything, but sorry, this is straight bullish. Thinking about sells. So bullish flag pattern and how to trade it. All right, there's multiple, right? Flag, you get the breakout, you see it got the retest of the flag there, took off. Another example, flag came down, respected. They even found another flag within that flag, right out of that flag that also took off. So this is, a high probabilities, right? What's the chances of one thing happening over another? So then took the tab out. So that's my case in point for Friends 40. I have that planned out. I'm not looking for anything different. I'm going to let the market do what it do at this point and wait to take my, advantage when it's time to take advantage. NAS 100 is going to be the same case. We look at the weekly time frame. We can see we have that same momentum candle. We get down into that daily time frame, and then we say, hey, okay, boom. We had a flag pattern kind of play out here. It never really got the retest. This market has the potential to do that same head and shoulders pattern, come down, respect 16, about 214 or so, and then carry that buy out there and after. So I'm prepared. I'm ready for, really most of the year, because if it goes bullish the rest of the year, I'm in such a position that I never have to come back and think about this again. And I'm making money all year long and letting that market do what it do. Some other things of interest that I'm looking at this year are yen pairs. Yen's been pretty strong recently. Have a target of 798 currently. If we can continue to maintain this momentum, that'll also top side us out on the RSI, because the thing about yen is right now, from a higher time frame perspective, 12 months was bearish forever, okay, for at least the last few years. So as I go into current time, let's say the weekly, right, I can see we have this fair value gap here, which was filled previously. If it has the chance to come back up here again, I now have a double top, which will respect the higher time frame sell. And then I can possibly see sells at that point. So I'm going to continue to look for all these other yen pairs to drop off until it does that. So as I get into pairs like GJ, and I look at the, let's see here, the monthly. All right, we got a nice monthly engulfing. The potential here is for GJ2, if it opens up this month and respects 183, okay, it would be a QP level because it is, the bottom line of 183. And then I'm going to look for that market right after that to sell into and respect this resistance area, because we did break it and never came back to retest. So this would be that retest of GJ. And then I can potentially look at buys at that point, okay? As I get into the daily, I mean, we can look at the weekly, but it's still the same case in point. Not really a lot of information for us to take away from there that we don't already have, but I can see, let's see, was that, move the zoom out the way here. Right, the potential for this bearish flag. And we're going to trade this the same way that we would trade a bullish flag. Okay, so now I'm going to look for this market to break this flag, come back, retest it, make that move down that I'm looking for. And then once we get to that location, I know we'll be way outside of the RSI, and that'll give us the potential move going back topside. But I do have to take into account as we go along, just leave yourself areas of resistance. Okay, here's two strong resistance levels. So I know either one or two things. It's going to find this as a support, or it's just going to support it enough to retest the flag and continue. If it finds it as a strong support level, then it's going to be an obvious break of trend here. So let's get our trend out here. There's our bearish trend that we're following right now. My expectations is for this to continue to follow that trend until we hit that point. But if we don't, and it gets support here and breaks this trend and decides to go back topside, I have a double bottom situation. I'll look for a retest and continue that buy. So giving yourself multiple ways, usually two is all I need to say, here's what could happen if it could sell. Here's what could happen if it's going to buy. Once it does what it does, I'll take advantage after. You always come in after the market does what it do. Don't try to outsmart, outthink the market and just enter at any location just because you feel like that's the spot. It's got to show you that that's the case. So you can see the same thing's going to go for EJ. CAD JPY also has the flag scenario there. So all yin, I'm just going to play off the idea of what JPY is going to do because that is the baseline for all of these pairs. Other than that, that's really all I'm really going to be looking at as we come along. I'm really, sometimes I mess with EU and GU, but it's pretty simple. If the dollar is expected to buy, EU is going to sell up until the dollar is going to turn around and sell, and then EU is going to buy. And that'll be the same case for GU. So other than that, that is all I am really looking for. Any questions on any of these real quick before we close off and go into the next speaker for the other pairs? No? Everything makes sense? Awesome. Tay, you're more than welcome to go ahead and follow up with gold.
Gotta move the little protector. I'm a conspiracy theorist, so I don't trust people. What's going on, everybody? I'm Taylor, one of the other instructors here. I'll call my instructor because I used to be the instructor. I just want everybody to do me real quick and throw one in the chat. We've been here for a minute, so I'm just curious who's still hanging around. Just throw one in the chat so I can see names. And then I'm curious what Samsung's name is. I keep saying your name is Samsung, but I don't know who you are. So I usually try to call people by names as I'm going through stuff. What's up, Zay? What's up, Ali? What's going on, DeAndre? Steve? Is it Xavion? I just guessed that name, so I'm assuming that's who you are. So I'm gonna change it up a little bit. I know Mike went over a lot of his spill. He always goes on these rants, and then Zay went on his little rant. So I'm not gonna rant for too long. I'm gonna go over one pair. I'm just gonna show you guys what I usually do at the beginning of the year or at the end of the year, which is I'm gonna break down what pairs that I like this year, and then I'm gonna remove some stuff that I'm not trading this year. So I usually trade like 3 pair a year, but I have a list of stuff I go through with you guys. So my red list on my list that Zay had on his side to the right, I have a list like that, but I only trade 3 pairs a year. So if I didn't like a pair this year and it didn't really mesh with me this year, I'll probably remove it like GN. GN and me didn't really mesh this year. So I'll probably remove GN from my list of pairs that I trade, and then I'm going to add something else to it. So I'll go over the list that I have that I like to look at, and then I'll go over gold today, and I'll show you what I'm seeing, not from top down, but just a bigger picture of what gold's playing out of. And then I'll also go over DeAndre's trade from a week ago with EJ about how his played out, and then we'll talk about the concept of getting in early and why it's okay to have those stop losses and take profits. So that's what my plan is for right now. So that's the game plan. So I'm gonna share my screen real quick. I'm gonna move this out the way because it's blocking all you beautiful faces so I can see everybody. And so what we'll talk about was my list of, I have a list like Zay has, like Jock has, like Mike has, like everybody that trade has, about pairs that we're looking at that we can easily scroll through and see real quick, instead of me having to type all the time. So on my list is XPX 500 gold. I have New Zealand JPY. I got British pound to the dollar, or Brazilian dollar. EU. I have Tesla on here too. That's another thing I'm gonna talk about too. I'm gonna go over some stocks that I'm looking at for this year that I'm gonna try to get either buy more shares of, which I've already done some work on, and then also some stuff that I'm trying to get into for the future, like Amazon. I have some stocks already at Amazon. See if I want to buy any more, or do I need to sell those off and then move those into something else. Let's go over oil. Go over US. He already went over US 30, so I'm not gonna talk about it. Netflix is another thing I'll look at. France 40, Amazon, and Energy Transfer, which is ET. So ET and Amazon are some of the stuff that I hold shares in. Netflix I hold shares in. I'm trying to buy shares in Tesla. I've been trying to get it in a good price. So I'm trying to wait on that to get it in a good price. So like I mentioned earlier, GN, me and GN did not have a good year this year. This is with GN. So I have all my stuff planned out for the year, and I can kind of see some of these trades that I took and some of the places that I was looking at. The bigger picture, it played out the way I wanted to go, but I just couldn't get the volatility of GN was giving me too much time and too much attention that I didn't want to look at it as much as I normally would for pairs when I'm looking at it for the bigger time frames. So over the big time frame for the daily, a lot of the moves you can see, I took a retracement here to the neckline for a head and shoulders pattern I saw that sold off. Is it exactly that? But it took too long for that the whole play out for me. So I can show you my ruler. For this move to happen, this move took 81 days. So if I wanted to make this, it took me over almost 3 months to get this to play out. And then, but we're not looking at just that. We're looking at how many pips that we also have off of that. So 673 pips for 81 days is entirely too long because it does a lot of consolidating in here, which means it makes a lot of moves up and down. As you can see, a lot of red, greens in here instead of just a fluid movement upwards as in it did later on in that year. Now, once it got to hit a stride, which is in January, it rose this entire time. So for 200 days, almost was that almost 8 months, it rose pretty well, and then it rose 2,700 pips for the year. But I didn't catch all this movement like I should have. I should have caught this earlier in January. It just held on to it, which I'm probably gonna try to do for gold, which I'll explain what I'm looking at. So 200 days, 2,700 pips. Now, if I do some math here, 200 days, 2,700, that's about like 100 pip a day. And then you got to think about margins and talk about holding. They penalize you for holding for a long period of time. So all those things got to come into play when you're holding trades for a long period of time, which is the way I trade. So, which is the reason why I'm probably going to cut GN from my list of stuff this year. So I just wanted to show you why I'm probably cutting from the list, and so you can see the bigger picture. And we look at some previous things that I was looking at trying to get in some trades, but I didn't get. This worked out. This never even went through. This worked out. Uh, this worked out, but it happened later after it consolidated. It's just a whole big thing. I'm gonna leave it on the list, but it won't be in my list of things to trade. I'm gonna probably continue trading SPX 500. This was pretty good for me this year. It moves a little slower than US 30. Well, they basically mirror each other in the way they move. So I can catch in the SPX 500, and it's not as expensive. I'm not putting my pip size doesn't have to be as grandiose in here versus US 30 in order to make some money and make a living. So I'll keep my list down to SPX 500, gold, and I'm thinking about going into like some yen pairs this year. So I was looking at like what is it? I think I was looking at GJ this year. So I might do GBP, JPY, which I always use Oana when I'm pulling. So I'll probably end up using this one this year. Add it to my list of pairs to look at. That way I have it in my calculator, and then we can look at it later, or I'll probably look at this next week to then break it down from the top down, which I'm about to do with gold. So I'll jump to gold, and don't worry about what's going on in my past here. This is literally the trades we've been taking for over the years. I've been marking this thing up since 2020. So I just I don't erase anything up from my charts because I like to see history of stuff. And building a history is pretty hard to do when you're starting out. So if you're trying to build a history, you can start seeing, okay, I have the confidence because I've taken these trades before and it's played these things out already in the past. So I've seen these flags eat up. I've seen me be able to walk this down from June to February. We took all these trades at that time. Strauss was in here, Zay was in here, Mike was in here, Byron was in here. We took all these trades back then. And then we did the same thing again in 2022. And then we did the same kind of concept in 2023. But 2023 was it was a lot more movement because of what was going on in the world. So gold was getting fluctuated like crazy. So this fluid movement we had over that period of time of me just knowing, hey, this is going to be a sell for majority of the year, and then another sell for majority of the year, flipped into and moving into this weird concept. So we'll look at it from the top down, which is the daily. Actually, let's look at the 12-month first to see some cool stuff going on. So the first thing you're going to see off of the 12-month is, hey, over the whole year, we did a pretty good year. We had a pretty good buy year. We were pretty bullish this year. Some cool things that we're looking at is, I always talk about momentum when we're looking at pairs. So if you don't know what I mean by momentum, I'm saying you can basically see your candles building strength. So I have a small candle that's not growing, and basically spiraling or momentuming into something pretty big. You see these candles that they're growing, but then you start seeing, hey, this is starting teetering off. So you see our giant wick here, but you have to see a smaller candle. That means I know that it's starting to slow down, and that's what it did here. It slowed down the next year, and then it had a major drop off. And then as it was trying to build up, it actually slowed down again and then reversed again. So we start seeing these momentum swings here. And now we're in another momentum swing where we're starting to see, hey, this next year should be a pretty good year for buys. If I was going to buy up a bunch of gold, which means that gold is going to have a good year this year if I get in a good position to hold on to it. So my first major focus is looking for a retracement into gold, so that I got to find a good spot for gold. If I get 50% of this previous candle, if I can catch somehow 50% of this entire candle that happened the month before, so 50% of that candle is going to be at 1976. I can delete this because I really don't need it outside of that. If I can find a way to get in here at 1976, because I can come in, let's just drop this. Excuse me. Let's make this thick because I can't really see it through all the color. Mad thick. And I can put the coordinates 1976. So now I see it. It's pretty thick. I can make it change the color too. Let's make this some other color. Let's go with if I do black, can I see it? Yeah, black's pretty good. Cool. I can see it in my black color in here. So if I can find my way to get into this pair at 50% of this candle will be perfect, but I might not be able to get that to happen because it likes to play out, especially since we see on the monthly that it already came here and wicked it in December. So it came here in December and wicked 50% of that candle and making this movement. So now that we're down from the 12-month, I'm in a monthly because this is normally what you guys are going to see unless you're paying for Trading View. I can go from 12 months. I can see the monthly. I think you see 3 months too if you're not paying, or 6 months. You can see these two, but I'd like to just look at the 12-month and then a monthly one because I don't really need 3, 6 months. I don't really need it. Some things I'm seeing momentum swings again. I'm seeing that I had a really big candle here, started to slow down. I got this nice little doji just trying to form here. So next month, if we're good, if everything works out, this will need to be a really like a perfect doji. Like we'll see very little candle like this one is, and then we'll start to see this come down and give me my 50% of this previous time, or we'll just see it just drop, which is probably what it's gonna end up doing. It'll probably just drop next month, end up being somewhere close to here, and then it might just wick it on the monthly and then come up. So we have to watch it throughout that month and have a little reminder of ourselves. That's why we write these little messages, because once we go these charts, I don't be really stalking these things like that anymore. Look for 50%. I'll put 1974 to buy for yearly. Sorry too if you hear me like I'm sick right now. So so we'll look at this on this lower time frame. We see on the monthly, I got this trying to reverse. We were also at an all-time high. That's another reason why I'm saying, hey, this is probably going to sell off, because we've only been here 3 other times, and that was in 2020, 2022, and now 2023. So we're looking for this to come back down, but we also got to think about it that it finally went through here. So the last 2 times we were here, it just came here and just touched it and left. Even the third one, this is the 4th touch we have here, and it finally wicked through here on a monthly, which means the weekly Nope, the weekly too. It only has a wick through here. So we're showing that it's starting to lose some of its power and that the support and resistance level is starting to give a little bit. So if we can get this to finally complete a candle above here, it's gonna take off upwards, and then we're gonna be in a nice little weird game of where is it going? Because this is a new high and we haven't been here before. So the question is, where is it gonna end up being, and how can we get into it and make some money while not having any history to play off of to try to get us to find out where it's going. So it's gonna be a little weird. So we're looking at the weekly now. Weekly is saying, yep, we were here on December 11th. We came here a week and wicked it in that week. And then we're bouncing between the zone. So I'm looking to see if I can find any kind of candlestick patterns, trying to see if I can find any things indicating that it's going to give me reversal. I see a hammer right here in this on the 25th, that weekly that happened at a level of support resistance. So I'm looking to see if this is going to give me a sell this next coming week. So I'll come here and try to guesstimate where my arrow is. Arrow's here. So I'll say that, hey, I'm thinking about this is going to come this next week is going to come down to here. So I usually try to draw my arrows out in advance to try to indicate where these are going. And then I'm looking to say weekly is saying it's going to sell because we're seeing momentum gains, but we're seeing that everything's stopping at this level here. So I don't see anything that's saying it's going to break this level yet. So I'm indicating, okay, it's having a hard time breaking through. It's probably going to come back down again. I'm not trading this sell. I'm just monitoring the sell to see if it's going to come down. And then once the sell happens, I'm buying. I don't reverse trend trade at all. We're looking for buys the whole year. We're saying this year is going to be a buy year. So anytime you see me marking down like this, I'm looking for this to, okay, I'm envisioning this retracing to this level. And if it retraces to this level, which honestly, I'm looking for it to retrace to this level. If it retraces to this level, I'm buying. And I'm looking for any pairs here that can give me indications of buys. But knowing me, if I'm already seeing what I'm seeing, I'm able to give a couple pips. Unless it blows through here, like it has a giant candle like this one that emulates right here and just blows through her, then I'm not going to buy it. Like Zay said, it's got to give you some kind of candles to indicate here. So I'll wait till it come down to 1976. Show me it's going to try to slow down, and then I'm going to go buy it up, and I'm going to hold that pair for a while. Let's look at the daily. Same thing, yeah. Daily everything looks really good. And if you start seeing this stuff here, anytime you start seeing these wicks here, like these wicks are crazy. Like on the big time frames too. Like if you see on the monthly and the weekly, ew, I hate how it came out now. Let's do this. Delete it. Redraw it. There we go. It still looks horrible, but whatever. We got this giant wick. Anytime I start seeing these wicks, they are like they normally indicate there's gonna be a reverse in the trend. So that's normally what happens. You see it here, that's a giant wick. You see it here in history. You see it. There's plenty of places in history that we're seeing this play out. Happened here, and this is what we're looking for when we're trading. We're looking for a history. Everything has patterns, so I'm looking for a pattern in the history to indicate some of the stuff. So gold says, hey, anytime I'm about to reverse, I usually throw some kind of wick here to indicate that I'm reversing. Wicked, wicked, wicked here, giant wick here. So we got another wick here. This is probably going to sell off. I'm looking for the sale to happen. And when the sale happens, I'm looking for this to buy. I'm going to buy. I'm going to take this buy, and I'm going to hold it as long as I need to in order to make me some money. So back down to the daily. Looks the same way again. I'm seeing this might be forming an M. Because we can see they got the two tops. So brush again. So you got your first one here, you got your second one. Yeah. I can't draw today, apparently. I'm not a really good artist. I got my second top here. So I got my two peaks. So I'm looking for this to sell off. And when you start seeing sales like this, normally we'll say that, hey, this sale's gonna happen. We're looking to try to watch it break below here and then sell the neckline, which would be perfect for us if it does that. Because I'm trying to get this as low as possible because what's the most important thing we're trying to trade? If I'm buying, I'm trying to get my price out of what? Anybody got any answers for me here? I'm asking questions now. I can't even see the chat. Boom, chat. I'm trying to get this as lowest price point as possible. So if I'm looking for this to buy, I can watch it sell for a month. I got the next 11 months to, yeah, I'm trying to get this at the low, key levels or a low. So if I can see this sell off to here, sell below here, and then starts to show me momentum that it's going to gain to buy, that's perfect for me. I'm just going to buy it then, and then I know that hey, it's coming back to this all-time high again this year because it's been doing this consistently at least once a year. So that I can try to hold that off and try to get as low as possible. If I get this at 1848 and just sit on this, and then if I can buy this up into 2070, 79, I'm up 2 grand off of just that pair. If I was looking at it in the instance of stock, but if we look at this as an instance of pips, then it's a totally different game we're talking about. We're talking about I'm buying at a point. If I even bought this at the lowest one, which is a 0.01, I'm still making money. Like I'm making a bunch. I'm making what 25. So I'm making about 2 grand off of this trade easily. 2 grand off this trade off of 0.01. Just holding that. If I just wait it out a little longer. Now we talk about if I have my account big enough, if I'm looking at 0.05 or 0.5, I'm looking at making close to 10 grand just by just sitting here and waiting a little longer so I can play my trades out. And then all it takes is patience, honestly. Everybody's quick to jump in these trades and rush to make money, but patience will get you far. I don't have to take too many gold trades a year to make enough money to be good for the year. Let's look at the 4 hours, see how the 4 hours looking. 4 hour looks good too. Everything's giving me indications that it's trying to reverse. This one's throwing out head and shoulder patterns. The daily was throwing out double tops. Everything is showing me that it's trying to come down. So we're gonna do what? We're gonna let it come down. Now, if I was just one of those chasers, like I'm making fun of Zay because Zay does all the time. He'd be reverse trend trading all the time. It'd be irking the shit out of me. So he'd be like, yeah, we're selling this. I'm gonna take this sell. We're gonna sell it. He'll be right. Yeah, I'm right. I can take this sell too. I know it's gonna sell, but it's not good. It's not good practice to be counter traded because what's gonna happen is that it could be selling and then boom, it'll just take off and it'll go up. And now you're in the problem of is that you try to chase it or try to hold it, praying that it comes back down to your level again. And it's probably not going to. If I was going to wait and buy this, if I just bought this now, I know that it's going to eventually come back to this point because it is in a buyer's, it's in a trend for that buying. So if even I bought it here, if I took it here and bought it and just kept selling, I know it's coming back up. So I just gotta wait it out. It's all about the wait game at that point. Hey, this is gonna eventually come back and buy because the market is in that movement. So that's the way I see stuff. So this is what I'm looking for gold for the year. We're saying, hey, gold is trending upwards. We're looking for us to reverse. I'm looking for a reverse here. This looks yeah, reverse here to at least 1976, 1974. And I'm looking to try to buy this here. If it breaks below here, that's perfect for me. If it comes up below above that, that's fine with me too. I'm just gonna take the buy and I'm gonna hold it, and then it's gonna try to move itself into a sell eventually because it's gonna be too high. But that's fine with me. So we can honestly look at the bigger picture, which is everything's been trending upwards. All we're looking for is a pullback now for us to sell off. Now let's look at I got two other pairs I'm gonna show you guys real quick, and this is energy transfer. So I had got into ET, and this is not financial whatever. I'm not giving you any financial advice here, but I had bought ET in COVID. I saw this at a great price point, and I can show you what I was looking at the time. Because if people always ask me the question is, can you use TradingView or can you use what you learn in Forex to trade stocks? And I've been using it for years. So I'm seeing here, hey, this was at a pretty good low. This is trending upwards. We saw that it broke below here and it hit a little level here. So I saw, hey, this was at an all-time low. This is the same concept that we just talked about for gold being at an all-time high. Hey, it's an all-time high. This thing's going to sell. Hey, ET's at all-time low. It's only been here three other times. This is here in 2008. It's here in late 2008, early October 2008, November 2008, and then it was here again in February 16. It has not been this low in years, and it's happening in COVID. I said, if I can buy as many shares of ET at $3, I'll be perfect. If I can even, in my mind, potentially get this back to $35, I got a whole bag and a half. And the other cool thing about ET was that it pays out dividends. So it pays out 0.3125 per share that you hold. And I was looking at this. I think somebody else was on the call with me, but I was trying to put 15 grand into this because my goal is to have I want to have what's it, a revenue share. I'm trying to have this thing pay me out. Basically, like right now, if I put that 15 grand in, it'll be paying me out $1,500 a year, which is okay for now. But every quarter, it'll be paying me $389, which is basically $100 a month, or a little bit over $100 a month. But I'm trying to get that ball back into itself, and I got to do some math to find out how long it's gonna take me to take that 15 grand or 1,500, selling back into it to then eventually give me where it's giving me $1,000 a month. If it gives me $1,000 a month, which is gonna be a lot of shares, and I'll be living pretty good, having a lot of shares of ET. So that's the plan for the future, is for me to get this to a good spot where I'm estimating getting $1,000 or at least 3 grand a quarter, or what is it, 12 grand a year, from just dividend shares. Because if I can hold the price point, whatever, I still have 100. I could have, what was it, 80 grand in ET, but then ET is also paying me every month to hold that 80 grand that it's holding me in shares, which is a win-win. And that's how dividends work. People always ask the question of like, how do you break that threshold of like 8 to 10% if you're trying to make money in interest in stocks? And it's dividends. Dividends is how you break that threshold of your income. If last year from my shares I holding, I made 44%, because of the dividends I hold. Dividends got me to 44% EOY, and that's just for me holding for a long period of time. I've been holding these for years, but I also was holding them in a recession. So it's just stuff that I'm looking at. Same thing with Amazon. We saw Amazon was at a low, $81. We bought a bunch of shares at $81. Potentially seeing it come back to 181, which is $100 up a share. So you're making $100 a share if you just hold it for long enough. But Amazon doesn't pay out dividends. But we're up from 81 to 151, which means we doubled already basically within that point. So when you're looking at these, that's what you're looking at when you're trying to buy stocks. Stocks is different than dividend. I mean, from Forex. I'm looking at potential, where's that right now, potential earnings and the wait time. If I can make that money and hold it, because everything I'm doing here is long term. This is for my future. So I'm not really caring about this money at all. This money just sits in a savings account. I mean, in an investment portfolio, until I eventually sell it off. But then I can leverage it later if I want to, if I want to margin it or whatever, which we'll talk about when you guys are there at that level. When you guys will talk about margining and things like that, and taking out loans against your money that you have invested. We'll talk about that in the future. But that's everything I'm pretty sure I have. I don't know if I had any questions for me about other things I'm looking at. I got my 3 shares I'm looking at this year. So most of the time you'll see more recordings will be me talk about those 3 and then whatever you guys are looking at. And then DeAndre, let's look at I just added your stuff in here. So I think it's Euro JPY that you're looking at.
Yeah.
So I saw your trade again. I still think it was a good trade, and this is why I'm gonna tell you it was a good trade. I think you just got in early. So I think you ended up, let me see. I'm gonna try to guesstimate this pot again. I think you got in close to here. I think you got in right here. In this area. That's what you're trying to get into, right?
Yeah, about 21 December or so. Yeah.
Yeah, so 20 right here. So you took this as a sell. We talk about selling here, which we're still seeing this as the trend is correct that we're looking at coming down. The question here is that the question would be, where's your stop loss at? So if my stop loss was at my previous high, which was here, then you're golden. But I don't know where you had your stop loss. That's what I was curious about when I looked at your stuff. I'm like, if your stop loss was here, then you're up right now. Correct. You just had to wait.
Yeah.
You just had to hold it for another week from the 21st, which would be what? I'm horrible days these days in my head. So you had to hold it for 6 days. 6 days into total of 8 days. So holding it for 8 days, you would have been in profits. But those 7 days, you probably been atrociously mad at yourself, thinking that you were wrong. So did you take that? Did you actually take that trade, or was that one of the trades we talked about? Were you just gonna see how it played out?
No, I took your advice. You just said plot it out, get the confidence on the trend. And then when you had asked me, you're like, where do you see it going? I said, I see a potential reversal. And then as I was going through, looking on the daily, it did a head and shoulders. And then Zay did a review. And so now I saw where, the downtrend was going to continue on that. So if I would have tried to open up for a reversal, I would have taken an L.
You think he would have took the L? Where would your stop loss have been?
Uh, so on that one, just following the trend right now at the head and shoulders, if I'm going back to the 4 hour where I'm marking it up at the key level of support. Yeah, I wouldn't even be in unless it broke through the one that I have marked right now on my 4 hour.
Because if normally when I trade, when I'm looking at stuff, I'm looking at previous highs. That's how we try to like get out of like where we're going and where we're coming. Because you gotta look at your risk to reward ratios too when you're looking at trades. So if I'm looking at this trade and saying, all right, yeah, this is a sell. Okay, but my last previous high was, and I'm looking at, okay, this might be coming back to, which would be 15856. In the high side of things, we would have been correct about this, but we would have risked $1 to make $1.42, which is that a good enough risk? That's the question to ask yourself. Because if you in the grand scheme of things, you were right in your trade. I think this trade is still correct because of how I mark things up. So if I was this trade, I would have been correct in the grand scheme of things. I would have had to wait 6 days to be right, and I probably been stressing like hell on the 27th of December because I'm like, oh, this shit's it's gonna break through my stop loss. But I normally don't. Once I had set a stop loss, I don't adjust nothing. I just let it play out because you can't always be right. But in your defense, you would have been right if you took this the same way. But you would have been wrong on your risk reward ratio because 1.42% is not good enough for you to grow your account.
Yeah, it's supposed to be what, 2 and above?
2 to 3. We're looking for like 2 to 3%, like 2 to 3 risk reward. If I'm doubling my account or doubling how much I'm putting in every time I'm trading, then that's a better ratio because now if I lose, that means I'm also losing that dollar every time. So if I had $100 in my account, I lost this trade, I'm now losing 42 cents basically, or whatever the math is for it. I can't do the math right now. But then it'll take me two other attempts to. I have to have 2 more wins to be back to basically being plus. Versus if I had a double my account first. So if I had a 2.0 on here and I won the trade, and then my next trade I lost, I'm still up. I'm still back up 1. That makes sense.
Yeah, it does.
So that's why you normally risk reward is 2 or above. Because if I have a risk reward and I'm winning 2, if I lose 1, I would have to lose 2 more trades in a row for maybe back to being square 1. If I lose 1 trade originally, I'm only down to $9. But then if I win the next one, I'm back to being up money. It's just kind of the same concept I play out when I'm doing like if I play it's hilarious. When we're playing craps, that's the same concept I play when I play craps. If I lose, I usually double up to win back, but it's a horrible risk reward thing. I hate craps. It's just statistics though. You try to play out. If you start winning early, it's perfect. But if you start losing early, it can put you in a real big bind. But yeah, I think this trade was a really good trade. I think that whatever you saw was really good. It's starting to trend the way you thought it was gonna go to, and I think it's gonna get to the level that you think it's gonna play out to. So I just wanted to see how you felt about it because we haven't talked about it since I messaged in the chat about it. I try to get back on people, and this is the perfect time to do it.
Cool. Hey, Tay, appreciate you. Good overall synopsis. We're gonna follow up with Strauss with GA, EA. We'll figure it out. We'll get through crypto with Byron, and then we'll close things out. And appreciate everybody that's still, hanging tight, still learning, still keeping their knowledge up. Strauss, so the floor is yours.
So I
Can't hear you.
Can you hear me?
Yeah.
All right, so I'm gonna get right into it. I'm gonna scale in, just like Zay and Tay did. Let me share it. All right, so GAEA is my bread and butter. It's probably one of the easiest pairs for me to track. It's very good with retesting. It's very, very good with its pattern work. It's very good with its action, and I use them both because 9 times out of 10 they'll move at the same time, and if one's hard to read, the other one usually shows a lot clearer. And I'll show you because EA is in one of those little funks right now where it's hard to read, but GA shows it a lot better. So
right here in the 12-month. You're looking at it, sure, it's dropped all the way back down. Right after COVID, it started playing around in this little region right here. So for me, I always look at things both line and candlesticks. So I'm looking at it just dropping back and forth. You got a potential for a double bottom right here, but I don't do no action based off of here. For me, I see this larger double bottom right here, factor in the wicks. That's exactly what I get out of it. 6 months, just like I was thinking. You got it bouncing back and forth right here. Exactly what I want. So let's focus on this little end right here. You have this morning star pattern showing right here. It went up, broke outside of that, but now it's coming back in 9 times out of 10, testing at 50 on that candle. Scroll in a little bit more. All right, right here. You got your double bottom coming right back in. You got a few open areas that never really got tested on this time frame. So I'm eyeing something a little right here. Going to the month. So if you were with us a few months ago, one of the bigger things I was plotting up was this inverted right here that took off and never really got retested. As we continue to scale in, I'll show more and more of it. Drop down to the week, and here you go. So here's that same inverted, popped up out of there, never really came all the way back down, double bottomed and continued up. But within the last week or so, you've seen a lot of, the hell is that thing at? Oh damn, where's my auto at?
Trying to stretch it up.
I'm trying to find the auto to make it zone back in.
You gotta go to that, hit that little that right there, and just type in fit. Hit to check that off.
All right, bet. Used to be down here. I don't know what the hell happened to it.
Yeah, they changed stuff.
Yeah, they moved.
All right. So now I'll bring in my analysis. So over the last few years, I've been messing around with GA and EA. This is that inverted that I was talking about. And with this level right here is probably one of the strongest levels when you're looking at EA and GA, because as it goes back, it's been bouncing on both sides of that line for a very long time. So right now, what I'm anticipating based off of what's going on, because you had this head and shoulders, it finally dropped below. Me and Zay was talking about it a few weeks ago while I was playing around in this channel. It does that. It jumps around a lot, but as soon as it exhausts itself, it'll lock itself into a channel, and then when it breaks out, it's all gas. So right now, came down to this level. It's playing around right here. And like fibbing this up, this is a perfect 50 retrace. But dropping down right here, this is where I'm looking at it coming back to. Drop a fib on it. Yeah. So you got your 50 right here. You got it bouncing back up. But for me, ultimately, I'm looking at it to make it to this line. This is the retrace that hasn't been done in a long time. And this same retrace will line up. Let me go ahead and put a line on it with what I was showing on the 3-month. You got the same area that I was talking about on this candle that hadn't been touched whatsoever. So these are the same angles. This is the same things we all scale in on. We all look for imbalances and retraces, and GA shows it very clearly. EA, however, it's not as clear as I'd like it to be. When you get down to the daily, you still got a lot of bouncing around. You got this double top that it dropped right here. It broke past that, but it's constantly been retesting at it. So kind of like what I said with GA, it exhausts itself as soon as it drops. So right now we're sitting right here at this neckline, constantly retesting at it, and it's just waiting for GA to do his thing. As soon as it retests, I guarantee you both of them be out of there. But if you're a new trader, these are two of the ones that I constantly tell people to zone in on. They're pretty respectful. As far as you'd go back, every time it's produced a pattern, it usually reacts to the pattern, comes back, retraces. Almost every time. The only time it didn't really do it on the massive level that it should have was on this inverted that I was looking at. But other than that, it's pretty respectful when it gets down to it. There's a lot of pairs that ain't. That's all I
Word.
got.
Easy, easy, easy. I'll be definitely tapping in on GA and EA. Byron, yeah, anything for us on the crypto markets? I know we are pretty bullish in this upcoming year. You gave an awesome call back in August with the bullish momentum flowing from October, November. So that was fantastic.
Nothing much. I mean, right now at this moment, I'm still bullish, but I'm waiting to see how fundamentally these big Bitcoin ETFs are gonna react to I mean, how they're gonna make the market either go up or go down. Because we do have the Bitcoin halving in April of next year, and the Bitcoin ETFs, the deadline is the second week of January. So I think it's around the 8th or the 10th is the final day that they can be approved. So that's what I'm waiting for, to see what happens with those two. Because if they rise up, they rise, the prices rise up for crypto. And then when the halving happens, it drop down. And then the rest of the year, we're off to the sky. That's the
Awesome.
normal pattern for the halving. So
Awesome. From a chart perspective, I do want to share with you guys something I was looking at. And, you know, this could be far-fetched, couldn't be, but I'm going to leave it up here to see what happens. Bitcoin has this tendency to hit these points, man. I'm hitting these wick points and following it through this. So I'm definitely looking at the potential of this hitting 100K into the year, top of 2025. But we do have this resistance level that I do want to keep in mind as we go along, which is also a fair value gap area. So once we approach about 53,000 or so, I'm interested to see what happens there. Because we get through that, I'm pretty sure we'll touch the other side of this trend, or at least this channel that's kind of in development right now. So just keep awareness on that. This is a Coinbase chart. It had the most history on it. So that's why it's been the one that I've used. But for the most part, that's about all I'm looking at, man. Appreciate you, B. For that, we'll keep an eye on that up until April, see what happens at the halving. Any questions? We can use this time for any Q&A. If you are looking for a community to be a part of, look, we've put a lot of work in building this community and giving you guys a great education system to go back on and look at classes and go through old recordings and things of that nature. We provide books. We have a book club on a regular basis. We do health and wellness as well within the community, and we're looking to use this year to bring you guys along on trips and things of that nature as you progress. We're always having different giveaways these days. So please stay on the lookout for that. But again, if you have any questions, please drop them in the chat. Any charts you want to see real quick before we close out, let us know. All right, everybody good? All right, well, we're getting into this news week. NFP is coming this Friday, so be careful as you trade this week. Be prepared. Stay diligent, stay smart. If you're not, aware, I've never traded a news week or anything like that, just wait until the second week. Market will flow naturally there and after that. I appreciate everybody's time. Thanks for joining in. You can always sign up as a student at patreon.com/independent-trading-u. And we're on this thing almost every day, morning and night, right? Getting ready, being prepared, and staying diligent and ready to answer any questions. So tap in with us, tap into the Facebook group, tap into the chat, and we'll be able to help you guys out. All right. I'll holler at y'all later. Thanks for everybody's time.
Later.
Thanks again.
Appreciate it, man.
Appreciate it.
Most definitely.
Later.